most trustless name in news.
Well, the mini bubble we just experienced has finally blown its top. Pop! Over the weekend, Bitcoin had its first major dip in a while. And now, of course, swaths of grifter YouTubers have changed their tune and are getting bearish. But on this channel, we stick to our guns. We're taking this dip as an opportunity to score low prices on some of our favorite altcoins. Which ones are they? We'll find out in about 10 minutes because it's time for Chico Crypto. Yeah, it did happen. Bitcoin experienced something we haven't seen in a good while, a flash crash. A whole week of gains were erased in just minutes. From the price chart, we can see the price was near 44,000 on Sunday, and then it dipped Sunday night all the way to below 42K. And as of shooting this video, the price was even below 41K. Although many of us should have seen this coming, a correction. If you didn't know, the overall green week we had last week put Bitcoin on a 7-week green streak, meaning 7 weeks in a row, the price overall increased week after week. Over the last two previous cycles, Bitcoin has put in a total of 6 7-week green streaks. There has only been one single lone occurrence of Bitcoin putting in an 8-week green streak. So the probability of Bitcoin having another after last week was extremely low. And I kind of guessed this dip was going to happen. On my Blockchain Leaks Twitter Friday of last week, I tweeted, Bitcoin will likely pull back to 35K this month. Bear trap. By the end of January, we expect 38K. So personally, I expect another 5K to be erased from the Bitcoin price sometime this month. From Bitcoin's recent high last week, that would mean this total dip and correction would end up being around 21%. Which, my friends, isn't out of the range of possibility, because in the history of Bitcoin bull markets, major pullbacks are common, especially after a 7-week green streak. As we can see in the 2016 and 2017 bull run, there were 7 major pullbacks ranging from 31% all the way up to 43%. If we take the average of the major pullbacks during those 2 years, we get 37%. In the 2020 and 2021 bull run, there were less major crash pullbacks, a total of 5, and they weren't as severe, ranging from 23% to 32%. The average of these 5 is about 24%. And then in this current bull market, we have already had 2 major Bitcoin crashes, 22% and 23%, for an average of 22.5%. Although, like I said, this pullback comes after a 7-week green streak. What is the average crash after one of these streaks? Well, in the only 8-week green streak happening in late 2015, the pullback was 43%. Then the 7-week green streak that happened in 2016, the pullback was 34%. The first 7-weeker in 2017 had a crash of 40%. The second one in 2017 was a crash of 31%. Then the 7-weeker in 2019 had a crash of just 4%. The next one in 2020 had a crash of just 12%. And finally, the last 7-weeker that took place in 2021 had a crash of 15%. So the average of these crashes after 7 weeks straight of green is about 25%. So my prediction of a 21% pullback this month wasn't based on just a wild guess. History has shown us in the past it's possible. And the average of major pullbacks and 7-weeker pullbacks ranges between low 20% to mid 25%. Although, going back to my tweet, I exclaimed that this will be a bear trap. The dip, if it really gets going, is a ploy by the market manipulators to get the market sentiment bearish and get those who like to leverage trade to set up massive shorts. Then they will liquidate those with a big pump, likely towards the end of this month. Now, if you didn't know, with this recent market crash, there was nearly $450 million liquidated from people who were leverage trading, mostly longs. And I predict the same thing will happen at the end of this bear trap, but in reverse. Hundreds of millions will be liquidated, but mostly in shorts. Now, most of these liquidations happen because centralized exchanges have the cards to traders' leverage positions. As we can see, Binance has a leverage futures calculator. If some trader was taking a 100x position at a BTC price of 40,500 with a balance of 10,000 USDT to trade Bitcoin futures, they would be liquidated at a price of $38,683. Binance has a calculator for this, meaning they calculate this for all positions on their exchange, meaning they know when and where to drop or pump the price to make the most money from liquidations. This is why Bitcoin has these major pumps and dumps. Price liquidates people who are futures and leverage trading. It's one of the biggest problems with centralized crypto exchanges and the crypto markets. Now, remember I said we would be talking about some altcoins in this video. Well, the altcoin I'm about to talk about has created a solution to this glaring problem: scam wicks in the price of crypto assets. And that is why it's an altcoin I'm picking up in this pullback, because it's solving one of the biggest issues in crypto trading. Well, the project is Good Entry. Good Entry is the first of its kind decentralized liquidity provider derivatives market designed to offer protection for users engaged in trading or yield generation activities. This protection is no liquidation from severe price drops or pumps. They offer something they call protected perps or protected perpetuals. From their docs, we can see what they say about these. Protected perpetuals is a product that allows traders to take long or short positions without being liquidated by price. This means when the market price falls dramatically, traders will not have their positions liquidated by price, and neither do they take negative P&L. So how does this work? Well, below the team explains it. Traders are not liquidated based on price movements. Instead, liquidation occurs over time. When a position is open, traders pay for protection on their positions on a block-by-block basis from their margin. Liquidations by time, not price, an innovation that gets me super excited. Now, Good Entry has been in version 1 of their protocol for about the past 6 months, allowing traders to benefit from protected perps with 4 different assets: Ethereum, Bitcoin, Arbitrum, and GMX. Although Good Entry said they would be continuously shipping and improving the protocol, saying that a new version of the protocol would be launching before the end of the year. Well, they are living up to their roadmap words. A new version is launching in its alpha stage this week. So what benefits does it provide over the last version? Well, it does increase the amount of leverage a user can do. But what else? Well, one of the biggest things I'm excited about is their Easy Vaults, the LPs used for the trading on the DEX. From their article posted just a few days ago, we can see they say to encourage users to deploy into Easy Vaults initially, we will be deploying Good Entry Arbitrum STIP grant of 200,000 ARB between deployment and January 2024. Yep, by providing liquidity early, people can earn huge bonuses. Not just the platform fees, as Good Entry is a real yield protocol, but also you can earn ARB tokens, which is going to raise the APYs to to really nice levels. I have a sneak peek at the new version, and as we can see, compared with the other version, they are adding some much needed features. They're going to have a section to know the hourly rate you as a person will pay for having a position open. And they will have the position's runway, aka how long the position can be open until it falls under collateralization. This is something V1 does not have. Of course, viewers, only make sure to use the protocol if you're in a jurisdiction that allows it. I'm not saying to go leverage trade. I just see this as an altcoin that will do well because of the problems they are solving. Cheers. I'll see you next time.
The most trustless name in news.